Tuesday, November 3rd, 2020, Maneco 64, home of alternative economics and contrarian views. Today we're going to go down under in Australia. The Reserve Bank of Australia, the equivalent of the Federal Reserve or Bank of England down there, has cut rates to almost zero, down to 0.1. But more importantly, they've announced massive QE. It might not sound like a lot, 100 billion Aussie dollars. That's what they've announced, but it's 5% of their GDP. That would be the equivalent of the Federal Reserve in the US and announcing like $1 trillion of QE. So I've been telling my viewers that this is going to continue. And the Aussie Reserve Bank, you can bet, they're working together with the Bank of England, with the ECB, with the Federal Reserve. They're all working in concert. So I think this is a harbinger of what's coming even more from the other central banks. So let's go through the statements from the Reserve Bank of Australia, from the governor, Philip Lowe. He's the guy who doesn't care about all of Australia's gold being at the Bank of England. John Adams, he's talked a lot about that, how he's written to the Reserve Bank of Australia about having that gold audited, asking what they're really doing with that gold at the Bank of England. And why are they keeping it there on the other side of the world, thousands of miles away from home, right? So this is the kind of guy he is. So let's go through the statement from the Reserve Bank of Australia. It says, at its meeting, the board decided on a package of further measures to support job creation and the recovery of the Australian economy from the pandemic. Well, from what I've read and heard, there's been very little deaths in Australia from this pandemic. It's been more the reaction of the government that's caused this, not the pandemic itself. But let's keep going. With Australia facing a period of high unemployment, the Reserve Bank is committed to doing what it can to support the creation of jobs. Encouragingly, the recent economic data have been a bit better than expected, and the near-term outlook is better than it was 3 months ago. They always have to put this in there, the central bankers. Even so, the recovery is still expected to be bumpy and drawn out, and the outlook remains dependent on successful containment of the virus. So this is what they've done. The elements of today's package are as follow: a reduction in the cash rate target to 0.1%. I think it was 0.25 before today, so almost down to zero. A reduction in the target of the yield of the 3-year Australian government bond to around 0.1%. So they're targeting the yield curve, not all the way out, but up to 3 years. A reduction in the interest rate on new drawings under the term funding facility to 0.1. I would say that's probably a facility to help the banks in Australia. They must be really drowning or close to, how can I say, going bankrupt. A reduction in the interest rate on exchange settlement balances to zero. There you go, zero rates there. A purchase of 100 billion of government bonds of maturities of around 5 to 10 years over the next 6 months. So I guess that's actually the equivalent of 2 trillion per annum for the Federal Reserve, for example, in the US. So there you go. This is really crazy times. And if only Australia was doing this, for example, and all other countries had normal rates like 5 or 6%, you could bet the Australian dollar would be floundering even more versus gold, for example. So with that, I want to go through the Aussie dollar price of gold, the sterling price of gold, the euro price of gold, and show you how these currencies actually, they made new lows, or gold made new highs relative to the 2011 and 2012 highs a lot earlier than the US dollar, and how a lot of times on the breakout of those important levels, right after that, it came back down to retest that and even went back below it, but have since gone to even higher highs. And I think that's pointing to the same thing for the dollar price of gold. Yes, we made an all-time high recently this summer. We've come back to retest that. We're a bit below that. It feels like it's the top, but it's not. It's just a retest. And if you look back at these other currencies, they've done the same thing, but a year or two ago, and then they kept going. And I think the same thing's going to happen to the US dollar, because even before we made an all-time high earlier this year, I was saying that all currencies are sinking, and I said that it was only a matter of time until the dollar did the same, and I think it's only a matter of time that it corrects back up and makes another high. So let's look at the Aussie dollar price of gold. So as you can see, we broke the all-time high, 2011 all-time high back in 2016. It just went above it briefly, and then it came back down, and eventually it rallied again above that, which was around 1800, and now we're almost at 3000. So that's what I'm trying to say. These markets, that's how they work. They retest an old high, they break it, sometimes they correct back to retest the breakout. So let's look at the British pound price of gold. And this is a really good technical view of what I was trying to tell you. And bear in mind, these are monthly charts. So you can see there, the 2011 high was just below 1,200 pounds. And then back in 2019, we broke above that level. We almost went up to 1,300. And then it turned around, went back below 1,100. But look where we're now. We're almost at 1,500, and I expect us to make new all-time highs very soon to break through that 1,600 as well. So as you can see, the British pound price of gold made an all-time high way earlier than the US dollar. So let's look at the euro price of gold. It made an all-time high as well back in January, a little earlier than the dollar. Its all-time high had been in 2012 because of the European debt crisis. And as you can see, as we made new highs there, it spiked to around 1560, and then it came right back down, retested 1300. And a lot of people might have thought, oh, this is it. The euro price of gold is topped, and let's get out of gold. But look where we're now. We're almost at 1,700, and I expect to see new all-time highs very soon as well. That's what I'm trying to say here. The dollar price of gold is just doing this correction from breaking the all-time high. Very soon, I think we're going to pick back up. So with that, let's look at where the markets are this morning. Of course, it's election day in the US. Some people are saying that the markets are rebounding because of expected Biden win. I'm not too convinced there will be a Biden win. I think President Trump is going to win. Is that because I prefer one or the other? No, I'm just observing here. I'm not an American. I'm in the UK. So it's for Americans to decide who they want as president. But from looking at the Trump rallies, the enthusiasm there, and comparing it to the other candidate, there's no comparison. So, and I think a lot of the mainstream media, all the polls are trying to paint a picture, just like they did in 2016. I remember following the election on election night, November 2016. The New York Times was saying that Hillary Clinton had a 95% chance of winning. Does that mean that if Trump wins, we're going to see the market come off? Maybe. But I think there could be a lot of trouble if Trump wins. I saw yesterday reports of the National Guard everywhere around the United States, except, at least in the big cities. I saw pictures of Washington, D.C., New York, Manhattan, all the shops being boarded up in expectation of riots and troubles and violence. So it doesn't look good in terms of the social fabric for the U.S. We'll have to wait and see, of course. We might not even get a result by late tonight or early tomorrow morning. We'll have to wait. So right now, it's 10 to 9 a.m. London. We've got spot gold at $18.95, which is basically unchanged overnight. The high's been $18.99, the low $18.86. Silver is up 5 cents at $24.12. Range has been $23.89 to $24.22. The Dow future is up 320 points, 27,230. That's up 1.1%. S&P future is up 35 or 1% as well. The NASDAQ 100 future is up 0.8%. The currencies are firmer this morning. We've got sterling up 0.4% at 129.75. We've got the euro up 1/3%, 116.82, and the dollar's down 1/8% versus the yen at 104.58. Dollar is down also versus the yuan, very slightly though, at 668.74. Oil price is up 2%. WTI is at 37.70. The 10-year yield is up 2.3 basis points at 0.87. So there you go. Aussie Reserve Bank showing the way. Yeah, hold on to your precious metals. Keep stacking. These central bankers are not over yet. They're going to continue printing. And it's going to be unimaginable amounts that we're going to see. Something that is going to look crazy, really, when one looks back 100 years from now. This is going to be historic. How they're going to destroy all the fiat currency systems with their massive or hyperinflationary money printing. Just to give you an example, this year the Fed's increased the balance sheet by about 3 trillion, maybe a little more. Up until the '08 crisis, the Fed's balance sheet was around 800 billion. So it took them just a little less than 100 years since the inception of the Fed to get a balance sheet of 800 billion. And now, 12 years later, it's almost gone up tenfold to just over 7 trillion. And I expect it to go over 10 trillion very soon. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to the channel if you haven't yet. And if you do, make sure you hit that little notification bell to be notified of all my new videos. And you can also follow me on Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.